How's it going, everybody? This is BeatTheBush. Today, I'm going to talk about the Tesla stock and where I think it's going to go from here. The market has recovered quite a bit and it appears to be at the start of a bull market. These are all my opinions. You should not take my word and invest your money solely based on my personal opinion of this stock. Full disclosure here, I do own Tesla stock. There is a way for you to get a free share of Tesla stock. This is 100% gain, and right now it's around $250 value. All you have to do is open up an account with the Moomoo trading app and deposit $5,000 of investment money, and then you'll get your free share of Tesla or Google stock. Now, because Google is only worth $125 today and Tesla is worth about $250, I highly recommend you to get the Tesla stock instead. If you deposit just $100, you can get 5 free shares of stock, a share of C3.ai stock, and a $100 cash reward that you can redeem towards buying $1,000 worth of stock. If you deposit $1,000, you can get 10 free shares of additional stock. Check out my referral link down in the video description below. Right now, Tesla is at $249.83, trailing 12 months PE ratio of 73.48. 73 is quite a bit high for a technology company. If it's a mature technology company, I'd say it should hover around 20. So a lot of times people look only at PE ratio and then they think, wow, it's expensive. It says it's expensive, therefore I should not buy it. Tesla is a little bit different of a beast here because they are a high growth company. The question is, will they double or quadruple their revenue in the next 2 to 4 years or so? I'm looking at the Moomoo app on the Tesla page and you can see it shows a chart here, but if you click company on the right, it shows their profile at first, and then you can click financials. When you look at the operating data, you can see the total vehicle deliveries. The vehicle deliveries slowly notching higher and higher. It looks pretty linear. It's gonna continue on that trend. Vehicle deliveries by model number. Model S and X, I'm so surprised that it's so little. It looks like only a couple of percent of their total deliveries. Model 3 and Model Y takes up most of it, and then vehicle production is pretty much goes in line with vehicle deliveries. Earnings per share is a little bit deceptive because you can kind of fudge around with it. You can just spend a lot of money and then all of a sudden your company is not going to earn as much. So they can actually take the money and invest it in new plants to build more vehicles. So earnings per share to me is more a reflection of how aggressive the company is investing in their infrastructure. You can push it really, really hard and just spend every single dime you have, and then you have zero earnings per share. This metric is kind of fudgeable, not a good indicator of what Tesla can earn in the future. Revenue by quarter. In 2022 Q3, 21.88 billion, and then each number here is one quarter later, 24 billion, 23, and so it's kind of marginally increasing quarter over quarter. If you just kind of eyeball it, they're going to increase revenue by another 4 billion by next year. So another, what, 20% more? There are other catalysts for this stock that might come into play, such as additional revenue sources when Cybertruck comes out. I'd say the 20K Tesla is kind of opaque. You don't know when that's going to come out, if they're even working on it, if that's even possible for now. It's at least 1.5 to 2 years off. So not in the near future, but in the near future, we will see the Cybertruck, and this will be an additional revenue source. And the thing that got me excited about Tesla again is the GM and Tesla partnership with the superchargers. Tesla open source their North American charging standard connector. This is the standard Tesla charger connector. I think it's not well appreciated enough in terms of the technical aspects of this connector. When you think of a connector, it's like, oh, okay, it's like, do you have like Firewire or USB? Which one is going to win? It's a bit more nuanced than that. If you are a Tesla owner and you use the connector and you use other charge plugs, you can immediately tell that the Tesla connector is a lot lighter, is a lot more compact. The charge cable is a lot more compact. Anytime you have a connector standard that is easier and cheaper to implement, eventually it wins out over the competition. The reason why is they have a price advantage. If the car implements it, it costs less, they earn more profit. The more profit goes back into the company and they can develop better cars. With the lower cost, they can deploy more of these chargers everywhere. When you have more chargers, more people will adopt it. If you ever use the CCS adapter or CHAdeMO, it's enormous. It's just ridiculous how big those things are. It's gonna be a long drawn out war, but eventually it might go away. It's not as efficient because there's just too many wires. The wires are too thick. If you look at the Tesla connector and the cable that goes with it, it's getting thinner. The physical connector is smaller, so you're using less material. It's easier to handle for the person. So Tesla open sourcing their connector is a super smart move. You might think this is not good because it's going to eat into their network. Other people are going to come in and charge. It's going to mess everything up. But you have to think of it like this. If they can just open so many of those up that it becomes an infrastructure. Yes, there will be more demand for their superchargers, but they can just open more and more up to meet the demand. Eventually, it can become a cash cow because other cars are coming in to charge and they can take a small percentage cut, just like the Apple App Store. It's more of a platform play, and this is really smart. People are equating this as an Amazon Web Services moment. Amazon used to have their Amazon Web Service, right? It's really just for their own website. They decided to open it up to other people that might want to use their servers, and boom, it becomes a giant cash cow now. Initially, people might have thought that it's not a smart move because they have this huge advantage of making these servers that are really fast, but instead they become a provider. Everybody uses it, that people have to pay Amazon to do it. Same thing with the Tesla supercharger here. Then you have full self-driving, and I'm not going to be so partial to Tesla and saying, oh my gosh, it's going to work, right? Because I've used it myself and it's just kind of iffy. Ever since I started using it at the very beginning, right now it's not significantly better. It's a little bit better. I'd say like 20% after all these updates and stuff. How close do I think is the technology from, taking over and I don't have to watch it at all? I think it's a bit, but let's just assume, and this is a big assume, if it ever will fully function as advertised. The question to anticipate is if other car manufacturers will see that their technology lag behind and they'll have no hope of ever catching up. So then they'll go, okay, fine. Tesla, you win. We're going to license your full self-driving technology. And Elon Musk on Twitter have said that he's open to licensing the full self-driving out to other car manufacturers. You might think, gosh, this is like their baby kind of, right? Why not leave it only just to Tesla cars, and then they would have a huge advantage if it does work. If there is one car manufacturer, kind of like Hertz, right? They just jump the gun and then say, let's buy a lot of Tesla cars. And all of a sudden they have their own moment because they are piggybacking ride on top of Tesla now. So if there's any car manufacturer that gets a whiff of full self-driving, has a high probability of success, they might just jump on the bandwagon and license that technology, put it in their car. Let me just say that in a Mercedes, I tried the cruise control and lane keep option. It's not very good. The lane keep often does not recognize a road all that well, and it just kind of veers off. It hits the bumps and everything. So it does kind of work, but not as well as the Tesla lane keep option, which is, it just kind of gets mixed together with full self-driving. I'm not saying that full self-driving is perfect or anything, because it does make mistakes. Sometimes in very difficult roads, it cannot recognize the road. All I'm saying is that the technology is better than many car manufacturers. And if they can recognize this, and if they ever take the bite and start licensing the full self-driving, it's going to be huge for Tesla. So that's one potential. I'd say that might be 2 years out. And for the GM Tesla partnership, because they announced this, I feel like other manufacturers within 12 months is going to announce something similar. If you only look at Model 3 and Model Y sales and the way they're ramping it, this by itself, it's not going to increase the stock price all that much. Perhaps by itself, it might increase it another 20% or so, because their revenue is going to grow by that much over the next year, just from looking at the previous increases per year. These things that I'm saying is kind of predicting what's going to happen in the stock market and sort of favoring Tesla, thinking that everything is going to go their way. I think several key moments is going to happen within the next 2 years or so that will boost the stock price significantly. If those catalysts happen, people are going to see the potential. Therefore, I think that will boost the PE ratio even further. The potential to increase the revenue is what drives the stock price, not the current revenue as of this current quarter. So if the stock price goes up threefold, the PE ratio is going to be around 200. This is kind of like in anticipation that they're going to earn more in the future. Don't quote me on this or purchase Tesla stock because of what I'm saying here. My anticipation is that it will increase fivefold within the next 2 years. So the price target's around $1,250. In 2020, 31 billion in revenue. In 2021, 53 billion. This is 70% gain in revenue year over year. And then 2021 to 2022, you got 52% increase in revenue. When you are increasing your revenue by that big every year, this is pretty crazy. So definitely for 2023, they'll probably break 100 billion in revenue, if not more than that. So I think there's a lot of room to grow here. Tesla has reinstated their referral program, so now you can exchange these points for around 500 supercharger miles now. If you guys are interested, I have a referral link in the video description below. Thanks for watching this video. Until next time.